All right. Hello, everyone. Happy Thursday. Welcome to your weekly market check-in here with myself, Greta Wall. I'm your host, and I'm joined by David Prince, the leader of T3 Live's Inner Circle virtual trading floor. Happy Thursday, David. How's your day going so far?
Very good. Thank you.
All right. Very good. All right. The topic of our live stream today is a lot of things, but the title being Tesla and getting your earnings reactions. We're going to talk about Tesla earnings, Google earnings, and all the other news happening for the market currently. But let's start off with Tesla. The initial reaction to the report for the market was good in a flash, and then that did not hold up. And the stock, as you and I are talking now, down over 9% in today's session. Missing on revenue falling 12% year over year, continuing to see a decline in sales, and then a not so great presser from Elon to follow up on those not so great numbers. What was your read on the Tesla report?
First thing, probably the most important part that you forgot is free cash flow is down something like 89, 90%. That's it's an issue. So my initial read was, oh, it's not that far from estimates. They didn't miss by some huge margin. The street's going to buy it for a moment. So after hours, we actually bought some because it was flattish. It went up $3 or something. I said, you know what? I don't want to be in this. I like forced to trade because I figured the street would react by buying it because that's what they did. But I said, this is not healthy trading. Let me be out. So we took the trade, made a few dollars. And then I said, you know what? If there's a trade here or an investment here for me, because I wasn't, bullish enough to buy it into the print, nor did I want to buy a bunch of puts because he usually saves the stock via the conference call. So I said, I'm going to listen to the call and I'll just tell you what I think if there's a trade there. Well, clearly we all knew numbers would be down. There's nothing shocking about that, right? We're given deliveries, so we know enough. We know margins would be pressed. And numbers weren't great. Clearly not good. Free cash flow, clearly not good. But it all came down to what did he say? And could he save the stock? I listened to the call, and it was about with 2 minutes left. He gave us a time frame on robots, and the time frame, in my opinion, was much further than I think most were expecting. It involved years, not like next year. It involved many years. He talked in a very monotone, depressing, almost like an exhausted fashion. And by the way, this is one of the most important men to ever live in the business world. So I'm not. There's no judgments here. I'm just telling you what I did and how I listened to the call. I was getting more and more depressed, and I said, I think there's a short here. It's a little bit Steve Jobs-esque, meaning, is there one last thing he's going to say? The minute there was not one last thing, and I felt like his part of the call was over, and it was depressing. And in my head, I imagined a guy on Quaaludes with a bottle of vodka in front of himself, crying. I said, this is now a great short. So we shorted it. That was up at 3:30 as he was ending the call. Because I said, you know what? I don't think he's saving the stock tonight. And there's no reason a normal stock should be down 20 or 30. I said there's zero reason. If it's anyone else's company, this is down 20 or 30 right now from this price. So we went short. That's what we did.
In your morning call today, you did give the room some levels, key levels the stock needed to hold, that you could maybe get bounces off, or if it breaks down past those levels, then you're going further. Could you go through some of those levels for us? We're down past some of them at this point.
Yeah. So I just said, listen, if the stock's going to be saved on the chart, you just want that 310, 312 area to hold. It's got it. Otherwise, we'll probably quickly go to 300, the big hold number. And beneath there, you have the 100-day down at like 290. Beneath there, you have the 100-day down at 293. So it should be pretty fluid, right? If that 310, 312 doesn't hold off the open and we flush down to 301 in seconds. Now we're gallivanting around 300 trying to hold desperately. If it doesn't, I don't see a reason, right, for it to hold. But we know what Elon does. We know in 2 days from now, he'll probably talk about, like, I don't know, a robot that who knows? The point is, he'll always come up with some fantastic idea or theory or concept, and the shorts cover. So it's never an easy short. But for now, if it was a normal company and a normal CEO, there's, in my opinion, based on short term, I get it, robots and autonomous and everything Dan Ives oohs and ahs about. I truly believe robots have a bigger TAM than cars. I mean, it's like a joke to even compare them. But based on what he said, all this stuff is too far away to save this stock. So in my view, it should go to the very least low 290s. But I think if the market ever pulls back, this is going to test those lows from the Trump Musk battle, which is down at like 270.
All right. On the other side of earnings, Google reported a great quarter. Stock up about 1% today. What do you think about the, I guess it's Alphabet, but what do you think about the Alphabet Google report, and what that can read through for other companies like NVIDIA, AMD, the chip makers, the AI space? Of course, AI being a big focus in the Google report.
So we keep hearing, and I have no problem admitting, I believed it, that search is slowing down, that they're getting, their market share is being eaten by the chat GPTs of the world and perplexities and the 8,000 other AI products that people use instead of search. The numbers suggested otherwise. It was like 8% expectations. There were 11%. It was a really solid beat. And you can't pick it apart. And they talk about like how AI is helping them grow. So on the surface, everything smells really good. Like there's nothing you can pick apart. Here, stocks don't always reflect dudes, right? So I said, here's the one issue. The stock's gone like this, like a rocket ship right into the report. So we'll probably sell off from the opening highs, which we have. Doesn't mean anything's wrong. Just means the stock literally, where'd we go? From where to where? I mean, it was like a rocket ship right into the report. If you go back just 3 weeks ago, the stock was like 2.5 weeks ago, it was 172. So there were high odds into 200 where we opened like 198, 197. It was going to sell off. So that's what we've done. I wouldn't read into it too much. It's just simply some people taking profits that have been buying over the past couple of weeks. But numbers really solid. Still, if I'm not mistaken, trades at the lowest PE out of.
Yeah, I was going to say, you and I have talked about how cheap they are. The PE is 20, under 21.
Right, so you can always like get hurt by that, right? I mean, we all know buying PE. I mean, if you cared about a PE, you wouldn't buy stuff like Oklo that's gone from 9 to 76, right? So we're not in a market to pay too much attention to it, at least if you care about making money over the past year. Sometimes it can be a value trap. In this case, I think earnings tell us maybe it really is too cheap. It's not a value trap. I think that's what's going on here. But it went up a lot, so people are taking profits. But overall, I think, like if I saw 185, 186 again, I'd say, you know what? They're not losing market share the way everyone's telling me they were, and I'm going to buy.
What did any of the numbers from the Google report tell you for stocks like, or did you get anything for like stocks like NVIDIA, AMD, the chip makers that are
most
so heavy in the AI space?
Okay, first thing, there's the backdrop, right? Which is hyperscalers need to continue to spend and not pull back. Well, they raise CapEx by a significant amount. Like they don't raise CapEx anymore by like 200 or 300 million. It's by the billions, like these crazy numbers. So that, of course, took Broadcom to new highs after hours, and NVIDIA up. AMD's the rock star today. Lisa Su's like my best friend today. So that was what you could take out of the call. That was really important. Then the flip side is cloud strong. Amazon had a 5-point pop today that I think had partially to do with that. And advertising holding up, which took a Meta right through the 21 day. So I think there was enough in the report. It was way beyond, hey, Google's not losing market share the way everyone thinks. It's also cloud's holding up, advertising's holding up, and you can extrapolate that for the Metas, for the Amazons. And certainly more important than all of that is that CapEx, that spend, because the market's living or dying via this AI theme. So without CapEx continuing to grow, it becomes an issue. So yeah, it was a good bunch of data for the market to continue this wild run it's been on.
All right, Google and Tesla being the Mag 7 names that reported, but another important report last night was ServiceNow. Big beat, lifting guidance on AI growth. Stock is up 3.3% today, approaching $1,000. What do you think about the ServiceNow report in the software sector?
I think he's the best CEO in the space. I think it's probably the best company. It's kind of thinly traded. There's been times where I get really aggressive on it and I've done really well. Here, I didn't see a lot of alpha one way or the other. Certainly, if I was going to be one way, maybe it'd be long today. I'd buy it on a pullback. Don't have interest, but it trades at a hefty valuation. Everyone knows ServiceNow is like the leader. So I just don't feel like there's enough alpha there for me. But numbers were great. Guidance was great. He's great. So all good. Just don't see anything to do there.
Yeah. All right. A sector that has woken up in the market over the past week, but all the major stocks are down today is the housing sector. D.R. Horton, Lennar, Toll Brothers, Pulte Group, all those big home builders. You've been active in D.R. Horton. You've also been active in the space trading Open Door this week. We can talk a little bit more about Open Door and your real thoughts on the company. But what do you think about the action we've been seeing in the home builder space? And then I know you and I have talked a lot about the housing market, and your read on it is a little bit different than a lot of people. You aren't so bullish even if rates start going down. So talk about the stocks and then the space.
Sure. First off, we didn't mention the way I was playing it, like first and foremost, has been Rocket. Right?
Rocket, yes, yeah.
Huge believer in the family. I've always thought that these guys are some of the smartest people on the street. And go Detroit. And also just like they're making some acquisitions that made it for me like a soup to nuts, perfect company. That it's hard for me to get involved with these smaller stocks, but I was like, wow, the next time there's a bull market in housing, these guys, like, you want to buy a house, you want to look for a house, you want to get a mortgage on the house, you can just go to them. Like, I love this setup. So when no one was interested at 11, I bought it. When a little bit more people were interested in the 13s, I bought it. And then we had that run this week all the way to 18s after hours at one point. So that was my primary way to play this housing run. Beyond that, there's a basic theory here, right? It's like kind of two-sided. There's housing stocks, which the overall macro environment sucks. Like, let's just call it like it is. Rates are too high for a group of people and a country that's become accustomed to free money. It's just too high for them to buy homes. Now, some of our parents, like my mother, might laugh at me because they were paying as much as 13, 14% for a mortgage. But for the people right now, the buyers, they haven't seen this in a while. So it's tough. However, a lot of these home builders, I'm learning, right, quarter after quarter, are so efficient at managing, one, their inventory, two, the customer, and offering to pay down interest rates for the first year, that they're still performing in the most awful environment. They're still producing pretty solid earnings and trade at very reasonable multiple. So now, I've always thought, the closer you get to a rate cut, like anything else, then there's a catalyst. Well, whether it's Trump putting Powell in a headlock and giving him like a wet willy to force him to do it, or whether it's just a slowdown in the economy, it does feel like after all this time of waiting, eventually we're closer to rate cuts than we certainly were a couple of months ago. I get it. There's, clearly an issue with tariffs causing inflation. The point is, I think we're closer now than we certainly were a few months ago where I thought there was no rush. So it feels like there's a catalyst. That said, as rates move, like today, there's some strength. It's not very good for housing because they need that clear signal. Rate cuts come. So today you saw yields pop, and a lot of these housing stocks across the board are down between 2 and 4%. But I always like to have one or two decent swings I can dig into at a level that I think is more long term. Recently, that was Aero Environment for me in the 230s to 240s. And now for me, it's housing all over again. Rocket was a huge win, so I haven't added back to it yet. Maybe low 14s, I would, but now I've gone with DHI, Horton, DR Horton. And I'd like to add more to the space if I think there's a weakening in the economy that's not, one, a recession, and two, that just spurs on some rate cuts. So I like the housing theme. The big win for me was Rocket. Now I'd like to add to my exposure. We've played Nail and some of the other players as well.
You mentioned Rocket getting wrapped up in the meme stock craze. So meme stocks are back as of this week. Yesterday it was Rocket, WEN. What were the other two? GoPro, Rocket.
Day before that was Kohl's, and certainly Rocket got a little bit of it.
Yeah. So when you see that kind of action happening in this market, reminds us of 2021 and all of the craze that happened back then. Does that tell you maybe we're just a bit too extended in this market and everyone is just...
Yeah. So there's two things here, right? Everyone, right, who has half of a brain, who's been around for more than years, like, oh, wait a second, when that happens, it's usually a sign. And I've said that, and there's nothing wrong with saying that, because, people forget. It's not just a saying. You have to think, like, why are these stocks going up? Because it ain't interest rates, right? It's not because they're giving free money. What happens? Like, do you know, by the way, Greta, seriously, do you know why it happens? Because there's an obvious reason.
The short interest, right?
No, people are sick of buying NVIDIA. It's already gone up points, right? AMD went up. Hell, even Kava went up. Hell, even cannabis stocks started to go up.
The market has definitely broadened. Like,
so all of the things to buy, right? And they start buying them, and then the shorts, of course. So my point is, there's a real reason to be concerned, because it usually signifies people are sick of chasing the same stocks every day, even if it's broader, right? They bought some biotech finally. God knows they've been buying financials. So my point is, I put credibility in. It's a time to at least be a bit more cautious, especially since it coincides with the market literally staying above the 20 or 21 day for a longer period of time than we've seen, I think, since 1990. And I think it's only happened like twice in the past 35 years, this consecutive days above the 20 and 21 days. So there's so many variables here that say, listen, take some profits. There's nothing wrong with being a bit cautious. That said, so Rick this morning goes, I don't want to put on any longs. Do you think that's dumb? My answer was, yes, I think that's dumb. Because there's nothing wrong with swing trading ideas, even in an environment where you might be a bit more bearish. There's always going to be an idea. We're getting some movement and more ideas. So, like, open. Like, what a silly company to me to really focus on. I was more short and I bought puts, but yesterday it filled a gap all the way into 2. I was like at 206. I'm like, I'll buy it. Right? By 250, I was done, and I missed some. It's 260 now, and it almost went to 3. My point is, you can buy Oklo, huge breakout today. So you can be cautious on the market and still find amazing short-term trades. I don't see a lot of long-term stuff to dig into, but there's enough movement to make plenty of money in this market without having to make bets a year from now.
No, you're good. How does your morning prep differ in a market like this, where you're looking for more like cute trades, specific levels where you could make $2-3 versus these longer term investments that you focus on in different times?
A lot more like, hey, this level produces this move. So the best example I can give you, we talked all about this bearish Tesla. The minute I saw 301s, I went long. I was like, hey, there's a trade here. There's a cash flow trade. I'm very confident because the expected move was 22. Now it's down 28 or 29. It's into 300. I bet you'll get a 5-6 point bounce. By the time it was 305, I'd made $3-4. I was done. So charts, we use charts more. Oklo, big focus today. I mean, a lot of people on the chat have owned it. Like, I first bought it, not first, but recently at 60s, 59, 60. Yeah, 59, 60-ish. Anyway, my point today, though, is there's a whole new play because it took out recent highs. And once it took out recent highs, I said there's room to that old all-time high, 73s. And if it takes that out, to quote myself, Oklo is not a stock that should take out an all-time high and go up by $0.50. It's an alpha stock. Like, it moves when it wants to move. I said there's no reason it shouldn't go up $2-3. So there are people buying the stock even through that all-time high. There are people buying the 70 calls that went up from like $1 to 5 or 6. So my point is a lot more levels. Like, hey, this works on the chart. This is something you can do. Then you throw in that bit mine. So I'd like to own some for the long term, and I've been waiting forever for it to work to go down, because it's overvalued if you go by net asset value and all that stuff. But it's come down a lot. My point is I want to get a position in the 30s and kind of put it away and hope to slowly accumulate it if it goes in lower or Ethereum corrects. So here's what I'm getting at. 42 is a big resistance area. It got over a spot today at 42.50. I said, I think this is about to go. The chart tells me it's about to go. So I bought it at 42.50. I kid you not. In 10 minutes, it went to 45.50, 46. So in this environment, there's a lot of trades, maybe a little less to invest with. Like, I'm holding a remaining part of AMD, ABAV, and if levels come, we add back. We did it earlier in the week with MP. MP came into the 8-day. Boom. I said, this is USA, my favorite stock connected to anything that's USA. And you got to buy it. We bought it at 56s because that's where the 8-day was. Literally, the next day it was 62. So using short-term charts a lot more.
I'm going to guess you have your trader cap on in this market. Yeah.
Why not? There's a lot of moves. The fact that I went long open was using a chart, not because I really want to invest in that business.
Right. Mm-hmm. All right. So when it comes to markets sitting here at all-time highs, the NASDAQ and the S&P 500 both hitting fresh records today. The Dow pulling back a bit, but at all-time highs. But like you said, we could still go higher. We could pull back. So what are some of the ideas that you do like here, if any?
Okay, so last time we chatted 2 weeks ago, I said Immunome is something like what's left that hasn't moved. And I said, you really got to focus there. The stock, since we chatted, went up something like 35%. Now, if you look at history and you look just at CEO purchases, his last purchase were 100,000 shares or more in the 13s and then one in the 7s. So over the 200-day, beautiful breakout. I think there's room. Now, would I buy a full position here? No. Like it was $8, a week ago. But I think you can invest. My Lisa Sue fandom remains, except the stock does nothing but go higher. But it's in a really strong breakout, and everything's going right for her finally, or AMD. So I don't see how you don't focus on AMD on pullbacks, but just not here. But I still think it's going to make up for lost time. And AMD, for me, has been a focus over NVIDIA. Ethereum. So I'm not one to drink the Kool-Aid or follow Kathy. And, Tom's a super successful guy, Tom Lee, and he's made some great calls. But I'm not really following them as much as I'm like, they're first to market in this whole concept of, a MicroStrategy copycat. And I kind of like the concept of being a bit lazy and owning it. I think it'll remain overvalued. So if it ever pulled back, like mid 30s, low 30s, I'd be very interested. I think Rocket is a long-term buy, is awesome. You see 14s again, it was as high as 18s this week. So I sold a lot. If it goes into 14s, I love that long-term business. I certainly think XBI has some making up to do. I told you I think it could easily be 100, 103 by the end of the year. And there are some ideas. I really think you got to be price conscious. Let me give you an example. I wasn't that excited about Netflix up at 12, even up at 13 and change, 1300s. It's finally pulling back. It comes into 1150 range. I think you can buy Netflix again. So as long as you're price conscious, there are some things to do. And Ethereum, let's face it, it's got a lot of making up to do. If it takes out that all-time high up at 4,000, it'd go up 20% more. So I think you'd be an investor there on any pullbacks.
Sorry, couldn't find the unmute. All right, David. David is Real Trader, so I do want to let him get back to the room, back to trading. So you can go to t3live.com/DP if you want to get David's free newsletter. We send this out on Tuesday mornings. Some of those levels we talked about, you get them for free, sent to your inbox in the morning with this newsletter. So kind of a readout of his morning call. Again, t3live.com/DP. David, have a great rest of your trading day, great rest of your week.
Awesome.
And we'll talk next week.
Thanks for doing it. Have a great day.
You too. Bye.